Welcome back to Finaxiom. I'm Sumit. Today we're doing a focused, no-fluff deep dive into 4 fresh IPOs on the market: Jaro Institute, Jaro Education, Seshaasai Technologies, Anand Rathi Share and Stockbrokers, and Solarworld Energy Solutions. We'll break down each IPO's issue details, what the grey market premium, GMP, is signaling, and most importantly, how to read the main financial ratios that determine whether the IPO is worth a long-term spot in your portfolio. I'll explain each company's IPO in plain language, show what GMP means for listing expectations, and walk you through the key ratios: profitability, margins, leverage, liquidity, valuation. If you're an investor who watches listings closely, this episode is for you. Let's jump in. Before the company-by-company analysis, a 2-line refresher: grey market premium, GMP, is an unofficial indicator of how much investors are willing to pay over the IPO price in the informal market. It's not guaranteed, but it reflects sentiment and expected listing gain. High GMP, market expects a strong listing. Low or negative GMP, caution. Always combine GMP with fundamentals. GMP alone is speculation. For every company I'll cover: IPO snapshot, price band, issue size, lot size, tentative listing date, GMP and market sentiment. What grey market is signaling today? Sources cited: Financial Ratio Framework. The 5 ratios you must check and how to interpret them for this IPO. I'll show how to compute them using numbers from the company filings, DRHP prospectus, but I'll not rely only on GMP. Conclusion: short, actionable view, what to watch, and the risk checklist. Jaro Institute of Technology Management and Research, Jaro Education, price band Rs 846, Rs 890 per share. Issue size Rs 450 crore, approx. Check prospectus for exact split of fresh issue versus OFS. Lot size and dates, lot size reported in media. Check broker page for exact lot. Tentative listing end September. IPO opening/price band details reported by LiveMint, Business Standard. News coverage at listing time showed positive subscription and GMP uplift in early days. Media reported GMP rising and healthy demand, reflecting decent retail appetite. Remember, GMP is volatile day to day. From any education, edtech provider, you should focus on revenue growth rate, YoY. Edtech valuations are growth-driven. Look for consistent double-digit top-line growth. How? Revenue this FY? Revenue last FY? Revenue last FY? EBITDA margin, operating margin, tells whether growth comes with operating leverage or just cost-heavy sales/marketing. Higher is better, negative is a red flag. PAT margin, net profit margin, are they profitable? For many edtech firms, profitability is key if growth is slowing. Customer acquisition cost, CAC, versus lifetime value, LTV. For online upskilling programs, unit economics matter. Low CAC plus high LTV = sustainable model. These numbers are often disclosed qualitatively in DRHP. Return on equity, ROE, and debt to equity. Leverage should be reasonable. Education companies typically don't need heavy debt. High debt raises balance sheet risk. Pull the FY figures from the prospectus: revenue, EBITDA, PAT, borrowings, equity. Compute YoY growth, EBITDA margin = EBITDA, revenue, PAT margin = PAT, revenue, debt, equity = total debt, equity, ROE = PAT, equity. If revenue growth is steady and EBITDA margin 10% with improving PAT margins, Jaro is moving from growth to profitable scaling, a good signal for long-term investors. If margins are compressing or leverage rising, be cautious. Prospectus available on exchanges, broker pages. Dependence on partner colleges, university tie-ups. Quality and employability outcomes, placement success. Market pays premium for measurable outcomes. Customer acquisition costs and renewal, retention metrics. Seshaasai Technologies, limited price band, Rs 402, Rs 423 per share. Total issue size, Rs 8113 crore. Listing, tentative listing around September 30th, 2025 as reported. Lot size and anchor allocation were reported in business press. Early media reports recorded strong GMP, R75 Rs88 reported by grey market trackers, implying a approximately 18-21% premium over the issue price in the grey market at the time of writing. Anchor subscriptions and disclosed allotments were positive signals too. Important. GMP here suggests healthy listing expectations for a company in payments/technology segments. For a payments and tech services provider, watch revenue growth and composition. How much from recurring service contracts versus one-time sales, cards, devices, software? Recurring revenue is more valuable. EBITDA margin and operating leverage. Hardware-led businesses can have lower margins. Software/service-led lines have higher margins. Net profit, PAT margin, after capex and finance costs, is business profitable? Or is it scaling with losses? Debt levels and working capital cycle. Hardware manufacturing or supply chain needs can bloat working capital. Check current ratio and days receivable, capex intensity and ROCE, return on capital employed. Tech firms with manufacturing need to show ROCE improving over time. If GMP is high, but EBITDA margins are moderate and the company relies on heavy working capital or debt, listing gains could be short-lived. Ideally, you want high GMP backed by improving margins and strong ROCE. The company's DRHP.BSE filing contains the detailed FY numbers for exact ratio calculation. Cyclicality of payments hardware demand. Competition from integrated fintech providers. Execution risk on scaling manufacturing. Supply chain. Anand Rathi share and stockbrokers. Limited issue size. Rs 745 crore, fresh issue plus offer for sale structure. Check prospectus. Media tracked active subscription behavior during the issue window. Allotment allocation details and listing timing reported in market press. Anand Rathi filed its DRHP with SEBI earlier in the year. Market reports indicated GMP around Rs24 to Rs45 at times, with commentary suggesting an expected listing gain in low double-digit percentages. The brokerage, financial services IPOs often attract retail and institutional interest because of perceived recurring revenue and higher margins when digital broking scales. Brokerage, financial services companies require slightly different focus. Revenue mix, trading income versus investment banking versus portfolio management, AUM, recurring trading income is more stable. Operating margin, EBITDA margin, high-margin businesses when tech-enabled. Cost-to-income ratio, lower is better, shows efficiency. For brokers, operating leverage, technology adoption, reduces cost-to-income. Return on equity, ROE. Critical, financial firms are priced on ROE. Compare to peers. Asset quality, regulatory capital and leverage. Brokers are regulated. Ensure the company meets capital adequacy and has clean regulatory disclosures. If ROE is attractive, margins decent, and revenue diversified, retail broking plus institutional plus AUM fees, then a positive GMP may signal justified listing enthusiasm. But examine cost to income and regulatory exposures, any client payment lapses or margin financing risk. The DRHP on SEBI contains these specific numbers. Regulatory changes in brokerage commissions or margin rules. Market volatility. Brokerage revenues are cyclical. Competition from discount brokers compressing margins. Solarworld Energy Solutions Limited Price Band. Rs 333, Rs 351 per share. Issue size. Media reports show the IPO aims to raise around Rs 440 crore for solar manufacturing and expansion, including a new 1.2 gigawatts facility in Madhya Pradesh. Listing window and subscription dates reported in the press. Coverage indicated active retail interest and GMP movement reported in market press. Sentiment generally positive given the clean energy theme and the government push for domestic manufacturing in solar. But GMP can be driven by thematic interest, green energy, rather than immediate earnings visibility. For a manufacturing renewable energy play, capacity utilization and revenue per MW, manufacturing economics depend on utilization and per unit realization. Gross margin and EBITDA margin, capex-heavy businesses should demonstrate improving margins as scale increases. Debt to equity and interest coverage. Solar manufacturing needs capex and often debt. Check whether cash flows can service interest. Interest coverage =EBIT, interest expense. Working capital cycle, receivables and inventory days. Manufacturing has inventory build-up risk. ROCE and payback on capital. How fast new plant investments convert into returns. A strong GMP based on green theme momentum is good PR, but you must validate it with improving capacity utilization, manageable debt, and path to positive free cash flows. Check the company's DRHP, filed with SEBI in October 2024, for CAPEX plan, projected revenue from the new plant, and historical financials. Technology and price competition from global module makers. Raw material, silicon, polysilicon, price volatility. Execution risk on the new manufacturing plant and timelines. Practical walkthrough. How you step-by-step compute the key ratios. Use the prospectus numbers. Use these formulas with the FY numbers from each company's prospectus, DRHP. YoY revenue growth, %, revenue_current, revenue_prev, revenue_prev x100, gross margin %, revenue, cost of goods sold, revenue x100, EBITDA margin %, EBITDA, revenue x100, PAT margin %, net profit, revenue x100, debt to equity, total debt, total equity, current ratio, current assets, current liabilities, return on equity, ROE, net profit, shareholders' equity, x100, interest coverage ratio, EBIT, interest expense, PE, post-listing, market price, EPS, use expected listing price to approximate listing, PE, EV, revenue market cap plus net debt, revenue, useful when profits are negative. Why these matter? Growth plus improving margins plus manageable leverage plus strong ROE, sustainable business. A high GMP without these is speculative. What the current GMPs are telling us, summary of market press. Seshaasai Technologies, GMP reported in press sites around Rs75 to Rs88, implying a approximately 18-21% expected uplift. Sources reported strong anchor subscriptions. Jaro Institute, Jaro Education, price band Rs846, Rs890, and media recorded GMP uplift in early bidding days, positive retail interest. Anand Rathi, media indicated GMP in the Rs24, Rs45 band at times, showing market expects a double-digit listing gain. Check SEBI DRHP for official figures before final decisions. Solarworld Energy Solutions, price band Rs333, Rs351. Media flagged strong thematic interest given solar manufacturing plans, but emphasized execution risk. Verdict framework. How I would decide whether to apply, short checklist, is revenue growth consistent? Prefer positive accelerating growth. Are margins improving or at least stable? EBITDA margin trending up. Does the balance sheet show manageable debt? Debt equity not rising dangerously. Are there positive unit economics, CAC, LTV, or clear path to profitability, especially for edtech and tech firms? Is GMP supported by fundamentals or only theme speculation? If only theme, beware. Regulatory and execution risks. Any red flags in DRHP? Litigation, contingent liabilities, related party transactions. If the answer is yes to the first four and no to critical risks, the IPO is worth considering for long-term investors. Otherwise, treat GMP gains as short-term trading noise. Always read the prospectus, DRHP, before subscribing. It has the real numbers. I used market coverage and SEBI DRHP links for the headlines in this episode. For deep ratio work, copy the FY revenue, EBITDA, PAT, debt and equity into the formulas I showed. The CBI and BSE filings contain primary source financials. GMP is a sentiment indicator, not a promise. Use it as one input among many. If you want, I can prepare a follow-up video where we take the actual DRHP financial tables for each of these 4 IPOs and compute the ratios live, with screenshots and a downloadable spreadsheet. If you want that spreadsheet, say, make the ratio spreadsheet, and I'll build it with all the FY numbers pulled from the prospectuses. Sources and reading: quick price band, GMP and IPO coverage for Jaro Institute, Live Mint Business Standard, Zeroda IPO page. Seshaasai Technologies, Price Band and GMP Coverage, Economic Times Business Standard IND Money Summary. Anand Rathi, SEBI DRHP and Market Coverage on Subscription GMP. Solarworld Energy Solutions, SEBI Filing and Press Coverage on Price Band and Objectives, Manufacturing CAPEX. That's the full deep dive script in essay format, ready to record for Finaxiom. Want me to convert this to a video essay script with timestamps, on-screen callouts, figures and visuals, and a downloadable spreadsheet with ratio calculations using the actual DRHP numbers? Say the word and I'll produce it.